This conversation is powered by Google Illuminate. Check out illuminate.google.com for more. Welcome to this discussion on Section 9 of the Federal Reserve Act, focusing on state banks as members. It's a complex area, but crucial to understanding the structure of our financial system. We'll be exploring the intricacies of state bank membership in the Federal Reserve System.
Indeed. The ability for state-chartered banks to join the Federal Reserve System has a profound impact on the stability and reach of monetary policy.
Exactly. Let's start with the application process itself. What are the key requirements a state bank must meet to even be considered?
Primarily, it involves submitting an application to the Board of Governors adhering to their prescribed rules and regulations. The application must specify the amount of stock the bank wishes to subscribe to, the same amount a national bank would be required to subscribe.
And what about the board's role in approving or denying these applications? What factors do they weigh?
The board scrutinizes the applicant's financial health, assesses the quality of its management, and determines if its corporate powers align with the Federal Reserve Act's objectives. It's a thorough vetting process.
So it's not just about having enough capital, it's about the overall soundness and responsible conduct of the bank.
Precisely. The board wants to ensure the stability of the entire system, and a poorly managed bank could pose a systemic risk.
Let's move on to continued membership. What happens when a national bank converts to a state bank or merges with a non-member state bank?
The resulting state bank can apply for membership under Section 9, but if it doesn't, the Federal Reserve Bank's stock held by the national bank is canceled and repaid according to Section 5. Mergers with existing state member banks maintain the membership.
And what about branch operations? Are there restrictions on branches for state member banks?
Yes, there are limitations. Banks existing before the Act's approval could retain their branches, but any new branches established after that date outside the parent bank's immediate area require relinquishment of stock in the Federal Reserve Bank. However, there are exceptions for branches in U.S. dependencies, possessions, or foreign countries subject to board approval.
The Act emphasizes the importance of the bank's financial condition and management. Can you elaborate on that?
Absolutely. The board assesses the adequacy of the bank's capital and surplus relative to its assets, deposit liabilities, and other responsibilities. This ensures the bank can withstand potential financial shocks.
So it's a holistic assessment, not just a simple numbers game.
Exactly. The board considers the overall health and stability of the bank, its management's competence, and the consistency of its operations with the Federal Reserve Act's goals.
Once a state bank is approved, how does the stock subscription work?
The subscription is payable on call by the Board of Governors, and the issued stock is subject to the provisions of the Federal Reserve Act. It's a crucial step in becoming a full member.
And what are the ongoing compliance requirements for state member banks?
They must meet reserve and capital requirements, adhere to laws prohibiting lending on or purchasing their own stock, and comply with regulations on dividend payments. They also have reporting requirements, including at least 3 condition reports annually. Penalties are in place for non-compliance, ranging from daily fines to significant penalties for knowingly submitting false information.
The Act also addresses bank examinations. How does that process work for state member banks?
State member banks are subject to examinations directed by the Board of Governors or the Federal Reserve Bank, using examiners selected or approved by the board. However, if the Federal Reserve Bank approves state-conducted examinations, those can be accepted in lieu of the board's own examinations. The board retains the right to order special examinations when deemed necessary.
So there's a degree of flexibility, but the board maintains ultimate oversight.
Precisely. The board can always step in and conduct its own examination if it feels it's necessary.
What are the consequences if a state member bank fails to comply with the regulations?
The board can, after a hearing, require the bank to surrender its stock and forfeit its membership. Membership can be restored upon demonstrating compliance.
And what about voluntary withdrawal? Can a state bank choose to leave the system?
Yes, after providing 6 months written notice and surrendering its stock. The board can waive the 6-month notice in certain cases, but there are limits on the number of withdrawals a Federal Reserve Bank can process in a given year.
What are the capital requirements for state banks seeking membership?
The board assesses whether the bank's capital stock and surplus are adequate relative to its assets and liabilities. Banks without sufficient capital must meet the requirements for a national bank or have deposit insurance approval. Capital reductions require prior board consent.
Are there any waivers available for these requirements?
Yes, the board can waive requirements for state banks needing membership to maintain deposit insurance. However, if the bank's capital is below the national bank standard, the board might require a capital increase within a reasonable time frame.
What laws and regulations govern state member banks once they join the system?
They are subject to the provisions of Section 9 and other sections of the Federal Reserve Act specifically applying to member banks. They retain their state charter and corporate powers, but are subject to board limitations on activities consistent with the Federal Deposit Insurance Act. There are also restrictions on the amount a state member bank can borrow from a Federal Reserve Bank on behalf of a single borrower.
So it's a balance between maintaining their state identity and adhering to federal regulations.
Exactly. It's a delicate balance designed to ensure both the stability of the individual bank and the broader financial system.
The Act includes several additional regulations specifically for state member banks. Can you highlight some of those?
Certainly. There are provisions regarding the unlawful certification of checks, the designation of member banks as government depositories and financial agents, and specific rules for mutual savings banks seeking membership. These regulations ensure consistent practices and oversight across the system.
And what about reporting requirements for affiliates of state member banks?
State member banks must obtain and submit reports from their affiliates to the Federal Reserve Bank and the Board of Governors. This transparency is crucial for monitoring the overall financial health and stability of the member bank and its related entities. Penalties are imposed for failure to comply with these reporting requirements.
What are the limitations on state member banks' dealings in investment securities and stock?
They are subject to the same limitations as national banks regarding purchasing, selling, underwriting, and holding investment securities and stock. This ensures a level playing field and prevents excessive risk-taking.
And what about restrictions on stock certificates?
The Act prevents stock certificates from representing stock in other corporations, except for member banks or corporations holding bank premises, and prevents conditioning the ownership, sale, or transfer of a state member bank's stock on the ownership, sale, or transfer of stock in other corporations. This is designed to prevent complex and potentially risky intercorporate relationships.
The Act also addresses the examination of affiliates of state member banks. What's the purpose of that?
Examiners assess the relationships between banks and their affiliates to understand the impact of those relationships on the bank's financial health. The board can assess expenses for these examinations against the bank, and failure to cooperate can result in forfeiture of membership.
Finally, the Act allows for investments to promote public welfare. Can you explain that provision?
State member banks can make investments designed to promote public welfare, particularly in low and moderate income communities. However, there are limitations to prevent unlimited liability and to ensure the investments don't pose a significant risk to the deposit insurance fund. The board sets limits on both individual projects and aggregate investments.
So Section 9 of the Federal Reserve Act provides a detailed framework for state bank membership, balancing the need for regulatory oversight with the autonomy of state chartered institutions.
Precisely. It's a dynamic system designed to ensure the stability and effectiveness of the nation's financial system.
That was a great discussion. Thank you for your expertise.